Good afternoon, everybody. Welcome to your weekend edition. It is Friday, August 19th. I would cheers you, but two things. A, I had just a horrible trading day, so I don't deserve to have a glass of whiskey, although I'll probably drink my sorrows later. B, I forgot to go downstairs and grab one. So no whiskey for me, but I'm going to air cheers everybody here. Hope you had a good trading session out there, even with all that red that happened in our markets today. I'm going to do a rundown of our top 7 markets, go to a bunch of listener questions, and then address, you guys were... I got hazed. I got heckled by some of you guys regarding some of my trades, which is totally fine. But this is how I felt today. A little bit of blood in the arena for me. Not the way you want to end a Friday, with some pretty good losses, particularly with crypto. Really just hammered me. But a couple of my other trades didn't go so well. I had one intraday trade that went well. That's it. One winning trade. Everything else was losing today. So, oh well, it happens. Not the best way to spend a Friday. Let's take a look at what happened for that trading week, at least from a market perspective. So I'll start with the worst performers today. As you guys can see on this Bitcoin chart, I'd had this kind of ascending triangle, expecting it to break to the upside, or at least anticipating it breaking to the upside. However, the prevailing trend wins. That bigger downtrend we've talked about for quite some time, prevailing today, pushing down into actually the most recent area of demand, right around 21,000. To me, this just totally opens the door back to the possibility of getting back to these lows right around 18,000. And then if that breaks, well, then I guess that $10,000 target that I have down here is still in play. Now, of course, that's a long way away. But, it can happen very, very quickly the way these crypto markets move. So that was your worst performer out there. And it wasn't just Bitcoin. I'm going to zoom out here just a little bit and show you my list that I follow of cryptos. Let me just sort by biggest losers. You can see you've got some pretty substantial losers in this one. There you go. 10%, 8%. I mean, at some point today, most of these were down double digits losses, 10, 11, 12, 15%. So an ugly day for pretty much anything in that crypto space, making it your worst performer on the day. Now, from there, we can move up a little bit up that list and get to the Russell, which continues its pullback from that overhead supply. As you guys may remember on yesterday's show, actually, I think it's actually when we drew this line at 2025, my expectation was, hey, we'll probably have a little bit of a pullback, kind of need one, and the target was going to be this yellow box. And here we just tiptoed into it today, right at 1960 was the upper end of that demand zone. I know I do not draw it the same way that many of you do. I draw them slightly different, but it's okay. We will use this as our demand zone at this point. Right now it's at 1959, down 2.1% on the day for the Russell 2000. Just a normal pullback. No big deal on this chart. And then I think it's kind of the same story for most of these other major indexes. You can see I had this 13,285 mark line on our screen, and that was where I was expecting this to pull back to today on the NASDAQ, and it did. I didn't think it would actually happen today. I thought it might happen over the next few days. It was just kind of interesting to see such a powerful slide, and all of a sudden we had a giant move down, erasing several days worth of gains. This week has been a pretty ugly one, right? We started off rather strong, and then wham, just crushing it to the south side, finishing on a very ugly note, down 2.03% for the NASDAQ. Same thing for the S&P, although the picture's not as dramatic. You can see I've got two demand zone levels mapped out, one at 2,000, the other is at 2125. And that's still in play. I think we could probably see those hit next week. Of course, the good news for anybody who is reeling from this market sell-off today is the market will have a chance to regroup and calm for a second on Saturday and Sunday, and then maybe we can see what happens Sunday night when these markets reopen, at least the futures market. So not the best looking charts to say the least, but it is due for a pullback. This is the nature of price movement. The uptrend is still intact at this point for most of these major market indexes, including the Dow Jones Industrial Average, which was your best performer from the index perspective, was only down 0.84%. So faring much better than these other indexes, even though it only has 30 components in it, finishing at 33,696. I do have this line drawn here, which is at 33,255. That would be the most logical target for a pullback in here, and we'll have to wait and see Sunday night how it opens up and maybe where we see it end Monday, which may bring us down to that 33,255. All right, going to keep going up the list. Silver, oh man, I'll tell you about my silver trade. Gold is what we're looking at right now, down 0.58%. Still drifting lower, and again, we've got these two levels drawn right at 1750, and even further down, it's a much deeper one, but let's shoot for that 1750 mark. on Sunday night's open going into Monday. My guess is we will probably hit that. As you guys, we've talked about, big unfilled open gap here from that weekend rollover on gold. That is a very logical price target, which could bring it all the way down to 1717. And yeah, just lots of potential for more downside movement here in gold. Now, for me, I'll just bring this one up since I'm on it. SLV, as you guys know, I am in SLV. I own a substantial amount of SLV. I had sold the 1750 calls, and I sold those right back here, actually. This is basically the whole month. It's right there. So back on, I want to say the 27th of July, I sold the 1750 calls, which was at the money, collected some great premium. And of course, you know, when silver got all the way up here to 19 bucks, you're going, oh man, I should have just held it and not sold the calls. However, it's fine with me, right? I have no problem with that because the premium I collected was substantial, was over 3.5% rate of return for the month. Great. Today, unfortunately, it looks like my silver will get taken away from me at $17.55 because it's 5 cents above my strike price on those call options. So my silver will go away, but I get to keep my premium. And all in all, it was a great trade for me because if I just held silver and did not sell the options, I would only collected 5 cents. Instead, I collected significantly more than that on my options premium. Now, what I'll probably do Monday, we'll have to wait and see how all the numbers look, but I'm probably going to just sell some at-the-money calls, or actually, I'll do at-the-money puts, on silver starting on Monday's trading session, depending on how it gaps or where it gaps, because I'm still interested in holding silver long-term. Therefore, I will sell some puts against that, probably do at the money, collect roughly 3% premium for the next 30 days. I may go shorter term than that if I can and get some great premium. My goal is obviously to get 1% or more per month in that account where I'm trading all that silver. So kind of bummed I missed it by just a few cents. I would love it today if we closed at $17.49 and a penny. That would have been awesome because there I would have, yes, my precious. It's okay. You know, the good news is I can always jump back in. And I think even better on that one, Joe, I made money. Period. Even though the shares got taken away from me, I still made pretty decent money, so I'm happy about that. It's now I gotta redeploy my strategy and sell some puts, collect that premium. If I get exercised, great, because I wanted to own silver anyway. And remember, if I sell the 1750 puts on Monday, and let's say I collect, I don't know, 1% would be 17 cents, so 3% would be roughly 40 or 51 cents worth of premium. If I collect 51 cents worth of premium on that, getting 3% for the month, then that means my exercise price will actually be right around $16.98, $16.99, somewhere in there. So even better for me, and we'll let you know the play-by-play as that one progresses. So the, I guess, best performer on the day was crude oil. We had that rally yesterday. I really didn't have any specific target other than potentially getting back up to this 93.64 mark on crude oil. The downtrend is still intact, so that is important. And again, why? Look at that dollar strength. I've been putting maybe too much emphasis on this one. It's okay, because I think the dollar deserves that emphasis. It is, in my opinion, the dog that's going to wag the tail here. If we see this surge back up, and we talked about it on yesterday's program, I think 109 was absolutely in play. Here we go. We came down to a demand zone on this most recent pullback, which is right at 105. Bounced off that one, tiptoed just a little bit past it, but bounced off that. Now I think we're going to charge these these most recent highs here for that dollar index. And if that does keep going, then I think Margaret is probably on the right track, where she says, looks like a shorting opportunity on the indexes. Yes, I think that would actually further bolster the argument for more downside movement in the equity markets. We can look at this most recent break above a high, and of course, people like myself and a lot of other traders are looking for trend reversal signals. And clearly, last week and this week was a trend reversal signal, but it could also be a bull trap, where it just gets all of a sudden the bulls in going, here we go long, and then it just comes back down. We never know exactly where things are going to go. As I've mentioned over and over on this program, I am a trend guy, and clearly that trend for the past month, a little over a month, has been almost perfectly up. However, bigger picture trend is more important, and that is actually trending down. I guess I could draw a line across these highs here just to kind of put it into perspective as to where we are at. And you notice that the high we achieved 4 days ago on Tuesday smack dab into that downtrend line across the top of the S&P future. So there you go. Maybe respecting that downtrend line a little bit too much. Question is, how far down do we go? Does this, drop to 4,200 and bounce from there and keep up the short-term uptrend? Or do we see it break down below, let's say, 4,100 and all of a sudden go back and start challenging these lows? I don't know myself. At this point, I don't really have a ton of skin in the game as with regards to long-term positions. I have a couple of positions on, but nothing that's overly weighted that's going to get me into any trouble here. I'm getting better at not losing money, but it's hard. Good, Shinobi. It's the hardest thing. And let's be honest, it's not about not losing money, right? You're going to lose money. It's just you're going to lose a little bit and not letting it get emotional or hurt your ego and your psychology. There are some people out there today that got absolutely slaughtered in this market, and we'll talk about that trade in just a second. So let me run through just economic announcements that came out this week. Canada. Retail sales, much better than expected, although a significant contraction, as you can see here. Not too bad. Other than that, there really wasn't a ton of major macroeconomic news. You can see both Canada and the UK coming out with retail sales numbers. Both of them were better than expected. They were expecting contractions in the UK. They got 0.3%, so good for you, Shinobi. Your economy is doing better than thought. And then for Canada, it's doing better than anticipated, but not as good as it was from the previous month over month. So that is your major pieces there. I had to share this one because Tim, thanks for emailing me and heckling me. This is one of the main reasons why I don't like making calls on programs is because when you make a call or you tell people about a trade that you're in and it loses, you tend to get a lot of heckling and, oh, well, you're an idiot, you're stupid, what a moron, why would you make that trade? And it's like, okay, great, fine. And then, you talk about some of the winning trades you're in, you never get any praise for that. So I generally don't like to talk about the things I'm in, but I thought yesterday was kind of an interesting one. What was going on with Bed Bath & Beyond, of course, you can read all the headlines now about some 20-year-old kid who made $110 million in a couple of days on that position, which is just kind of crazy. Like, oh, this 20-year-old kid just happened to have $25 million lying around. I don't know, seems a little bit fishy to me. Anyway, let's go check out Bed Bath & Beyond so that Tim can feel redeemed that he can heckle me about my BBBY trade. Down 50% today, actually, sorry, 40% today, and down another 2% in the after-hour session. Look, I knew, and I mentioned this yesterday, I know for a fact that Bed Bath & Beyond was going to crash. There was no surprise there. I guess the only surprise was that 40% of it happened in one day because this kid, unloaded his entire position of it. I guess the bigger question is, what happens now? Are we out of the woods with regards to Bed Bath & Beyond, or does it keep on drifting down? And that may be the part that hurts me at this point. As you guys know, I told you I sold the September 19th $13 puts, which at this point now means I am going to be executed if we were to close today. But if it was exercised today at this exact moment in the after hours trading session, I would still make money because it's $10.70. My average price, because I sold for $2.50, those options, my average price would be about $10.50. So I would still be up, but guys, I've got a long way to go. I've got all the way out to here, which makes me a little bit nervous. I thought maybe about closing that position today and taking a bit of a loss on it. But I think I'll be okay in the long haul. I'm not overly worried about it. So I'm going to let that one sit. And, this is certainly one of the pieces that you get for juggling chainsaws. This is the most volatile security actually as of this week. Just bizarre, crazy price action. And, my gut was telling me to go and buy puts on it, but the premium was so unbelievably high to buy puts, it would have had to crash like 50% for you to make a profit. And even if with this 40% decline today in those options, I wouldn't have made a profit on those if I bought puts outright. So I decided to sell those put options at a much lower price. When I sold those put options, we were up at like $20 or something. So 20 gets down to 13. That's a $7 slide. I'm all right with that. It'd have to fall 40+%, and it did today, which is surprising. So, Tim, you said, how did that trade turn out? Well, the truth of the matter is the trade is not over. What usually happens with meme stocks like this is you get this really big spike up, it comes screaming back down, and then all of a sudden it'll bounce back up. Remember who's holding this. It's not the institutions anymore. This is all those Diamond Hand, Reddit, and Robinhood traders who are like, I'm never going to sell. Bed Bath & Beyond's going to $30 again. That's generally what's still lingering out there in the background that's holding this one. So we'll see. The good news is I only have 3 of them, so it's not like it's a huge... it's not going to be one of those ones that just breaks the bank. In essence, if I get executed here and those shares get put to me on Bed Bath & Beyond, I will own 300 shares. And let's say it closes at $10. Well, that would be a loss of 50 cents per share on 300 shares. It'd be a $150 loss. No big deal. Robert says, I think Bed Bath & Beyond will drop to 3. I think that you're right. I just don't think it's going to happen in the week, right? So when we look at charts like this, one of the things to look at is, well, where did it come from? And let's just put the yellow box on the screen just so I can see kind of the range bound from this period right in here. This is the time frame that I'm interested in, which is the sideways consolidation from June 29th through the beginning of August. And you'll notice those numbers, $4.42 to $6. It would not surprise me at all to see a retest of those levels. I don't know about $3, but going into this, what was the trend? The trend was aggressive short, but one thing you got to keep in mind when you look at a situation like this is 80% of the shares of Bed Bath & Beyond were short. 80%. Now, this short squeeze pops a lot of those people out. So you're going to start to get some short sellers to come back into the equation. But if 80% of the shares were short on Bed Bath & Beyond and it was stuck at $4 was the low, I think you're probably safe with that regard, at least for the next few months, right? Over time, look, Bed Bath & Beyond to me is just kind of a dying business, huge overhead for locations and inventory when I can just go buy things on Amazon and save myself 20% of the cost. So I agree with you, Robert. I think ultimately down the road, I think we could see $3, but I don't think by the time I'm getting my expiration, let's put a vertical line on this one so we can just kind of follow along, and I'll start to let you guys know what's going on with that trade as it progresses. Here is vertical line is the 19th, right? I'll wager that this is not going to get below $3 by the 19th of September. Now, it could, but I think the probability of that is pretty damn low. Could it get right back to this area within the 4 to 6? Yes, I think that's probably a fairly good chance, but we'll have to wait and see how it all pans out. No one's been pointing out when I make a mistake. Yeah. Oh, yeah, no, it's okay. Joe, and don't worry, I wasn't trying to take a pop shot at Tim there. I think he might have been joking. Who knows? Whatever the case may be. When you see, a trade happen that quick. I mean, I woke up, actually, it wasn't even woke up, but last night I was just doing some scans and I was like, oh, crap, man. It was down 50% in the after-hour session. Real quick, let me just show you here, because it looks like this all happened today. It didn't. This was all happening last night after the market closed. So let's do a 15-minute time frame here. Here is regular trading hours, right? So it looks like a monster gap down. Well, let's just do extended hours trading and notice what happened. Here in the blue shaded area is the after hours trading. So this wasn't really like a straight gap down. This thing was selling off aggressively in that after hours session. And it was kind of... It was one of those things where I actually thought we'd see it bounce up, because part of the reason why that this sold off so aggressively in the after hours is, when you are trying to unload a position during after hours trading, liquidity is gone and you can't use market orders. So what happened is this person strategically was using limit orders and going deeper than the inside bid price. If that makes sense to you, great. If it doesn't make sense to you, then let me know and I'll explain it. But basically, this was a strategic decision. This was not, in my mind, a fat finger, which is where you put in the wrong value and hit enter. This was a strategically done piece. If they start selling those... So yeah, all of that happened last night. And then notice today, it was just basically flatline. When you notice here, the white part of the chart is regular market hours. And the beige or gold is pre-market, and then blue is aftermarket. So this white chunk right here, that's really all that happened today. And it really was not much. It was kind of a flat, boring day, honestly, considering what happened. Most of the volume happened and action happened in the pre-market. I see too many novice gaps. Professionals are, yep. And generally, that's the way it works, Robert, is, the amateurs are usually the ones left holding the bag. Let me scroll back here just to make sure. Shinobi says there have been a lot of that recently, bull and bear traps. Yeah, I know, and it's making it tough. It's happened to me quite a bit. I'm sure some of you are feeling that frustration as well, where you set a supply zone or demand zone. You're like, okay, I'm making a trade based off this. You get stopped out. It goes right past that zone and then does exactly what you thought you were going to do. And you're like, oh, serenity now. It's just part of trading. Just part of trading. One thing I would encourage you to do is, if you get to that point where it seems like it's happening too often in your trading and you start feeling like you're losing a lot, then scale back on your trading or take a break for a little while and regroup. Because for me personally, when that happens, I start to get rather negative and you start to feel like the world is against you, or someone's targeting you, or someone's watching your orders. which is not entirely true. I mean, they can see, but honestly, who's going to check out my order for a few thousand shares of stock or, a few contracts? No one's going to be headhunting me like that. But we start to think these things because we're losing. There's got to be a reason. Well, maybe I'm just out of sync with what's going on with those markets at that moment in time. All right, let me see what else. The Ben in the end told me, Michael Burry says, I should do, that's why I started to short those. Ooh, good to know. Yeah, you're really active in that crypto space, the trading. I'm curious, Brian, who are you using for your broker to be being that active? One of the things that in the Crypto Investor Live program that I do, I'm looking at things like KuCoin, and man, I just don't trust them. I just don't trust them. Those perpetual futures contracts have been so illiquid, and the slippage I've been seeing is unlike any slippage I've ever experienced in my 20 plus years of trading. So I kind of moved away from the real active stuff using perpetual futures, but curious who you're using. I'm going to try at 1 point to all my orders. You stretch it out a little bit, you mean? Probably not a bad idea. Of course, in doing that, OG, make sure that, you have Bybit. Yeah, for some reason, I can't use Bybit because I'm in America, land of the free, home of the brave, and land of you trade where we tell you to trade because we're controlling your finances. I've heard good things about Bybit. I've never actually used them. I actually quote their prices, but I can't get in there. Maybe I can start using my VPN more and doing things I shouldn't be doing. Don't tell the IRS. Those 87,000 new cadets will be coming after me for VPNing into international markets. Crypto still leverage to the QQQ, Apple topped. All right, let me go to a couple more different questions here. There's two more I wanted to get to. I mentioned this on yesterday's program. I think it was yesterday's program or a couple days ago. I'm trying to find the right tax person to come on the program. I don't like bringing on people that I don't know. And I'll be honest, I have a lot of people who email me requests to have somebody on the program, and a lot of times I'll look at them and I go, you know what? Feels like a snake oil salesman, and I really don't want to bring snake oil salesman on the program, although I have had some on, that's for sure, but just to see different perspectives, and we can all make our own judgments about the validity of someone or how their trading or system might work, and hopefully you guys can see through that. So I'm trying to find somebody who's the right tax person to come on the program to address things like this, because I have my understanding of it, but I am not a tax CPA or anything like that. How do you get your tax status changed to avoid wash sale rules? That sounds like a life hack. Well, there's a couple different things you can do to be declared a trader in securities. It's a status that you basically declare with the IRS. One of the criteria is you have to be actively trading, right? So if you make one trade a month or one trade every couple of months, that's not really active. You won't qualify. But if you're making a few trades a day, or if let's just say you make 5 trades a week, that actually is considered an active trader. Number two, do you generate a large portion of your income from trading? Therefore, that would be your main business, and therefore you could declare trader in security statuses. Now, there's several other things that you can look at, but those are the primary two, is the consistency with which you trade and your dependency or amount of money you're pulling out as a trader. So those are kind of the two main criteria. But honestly, I would just ask your CPA. Say, what can you tell me about trader and security status? If they him and haw and then you got the wrong person, right? My CPA knows right away when I mentioned trader and security status many years ago. They were immediately, or my guy was immediately like, yep, this, and then I showed him some stuff. He's okay, we can do this, and this, and here's how we're going to position this and this. So that made it much easier. And I believe if you're set up as an entity, a trading entity, like an LLC or corp, that you can qualify for tax trader status. But I'll have to get a CPA on here. Yeah, maybe I should ask Larry. I used to use Michael Atias, but he moved to Israel, and that just makes it really difficult to do calls. It's like 1 a.m. right now, so probably not going to be able to get those guys in the program. So I'll ask Larry. In the UK, it depends on whether you make a living at it or not. Yep, otherwise it comes under CGT. Don't know the British acronyms, but yeah, most of them it's like, are you making a living off of it? And then your consistency portion. So there you go. Those are the main two things to look for, Michael, with regards. But I do want to get a tax person on the program. If you have suggestions, email me at TraderMerlin@gmail.com if you got somebody who's got deals specifically with traders. I don't want, H&R Block recommendations, but if you know someone personally that, like my CPA, I would love to bring him on. A, he doesn't want to do anything to do with public appearances, and B, he doesn't want any new clients. I'm like, really? You don't want new clients? Come on. He's like, no, I'm full up. I'm like, all right, good. Then fine. I'm an accountant in the UK, but not sure that'll help you. Yeah, maybe a little bit different zone, but I mean, you could certainly give us some feedback for UK taxation. Maybe we can just do a tax special. Maybe what we'll do is we'll do a tax show, and I can have you representing the UK. I can bring in a US guy, and we can kind of go back and forth. But obviously, whatever country you're in, you need to make sure you check and see what the rules and regulations are for your specific market. One thing that you know, now that the IRS is getting a lot more money to scrutinize every single thing that you've done, you know, they're going to take your kids to jail for not declaring their lemonade stand taxes. This is going to get ridiculous. You know, you certainly want to be very careful and make sure you're not doing anything illegal. I've done everything in my power to stay above board. I have no problem with taxes. You know, it's weird. Somebody put it to me this way, and I think it's kind of a funny way to look at it. Paying taxes is basically you paying to not go to jail. So taxes are your payment to not end up in jail. So I'm okay to pay taxes because I don't end up in jail. Ain't my thing. I wouldn't do well in an orange jumpsuit. That's for darn sure. Cougar MXC for the more speculative stuff that isn't easily available. Okay. Yeah, you know, KuCoin, man, I tell you, maybe you heard me say this one, Shinobi, but like, I had a couple trades on. I was doing, I forgot which one it was. I want to say it was either Polkadot, Perpetual Futures, and I had a stop in place. It would have given me a maximum $500 loss. And all of a sudden, this thing, it knifed down so quick. And my stop loss was just stuck there. And it just kept on dropping and dropping and dropping. My stop loss should have executed. All right, this is probably over a period of about 2 minutes. So it wasn't like one candle. It was 2 minute decline. And all of a sudden, it margined me out. So which is your max loss, basically, per your account. Ended up being almost a $4,000 loss when it should have cost me $500. And I'm like, that can't happen if it's done properly. Otherwise, there's some shenanigans going on behind the scenes, which is what I think was the deal with KuCoin. So I don't actively trade it anymore just because I don't trust it. All right, let me go to one other question from Skilled Stocksman, who I think he's here today. This is a question about how to scale your trades if you are lucky enough to have your account growing. Say you start with $10,000. Over time, you get to $25,000, $50,000, $75,000, etc. So you're consistently growing your account. In your opinion, how do you go about trading more contracts and increasing your risk amount so that you can capitalize on that great new money without taking overextended risk? OTA did teach risk no more than 2% on your trade, but do you agree with what was your approach as your trading account grows in capital? Okay, so if you are making money at trading, the natural instinct is you start trading, and usually what most traders are doing is they don't have a percentage that they're willing to risk, right? They're trading all their money, they put it all on the line, and they're, you know, trying to grow their account as quickly as possible. Most people will just blow their account, right? You need to have some stop loss where you limit your downside and not allow you to make all of the beginner mistakes that you're going to make anyway. If you start to build, you know, I used to, when I taught core strategy in the Pro Trader class, Online Trading Academy, you know, for me, it's about proving to yourself over time that you can do this consistently. So if my account goes from 10,000 to 25 to 75, 100,000, whatever, instinctively you're telling yourself you're a great trader because you made a bunch of money. You may have just gotten lucky, right? You could just be very, very lucky, had a couple big high-flying trades, and your brain says you're a good trader. The proof is in the details. So for me, I would say look at your trading results, right? There's two really important variables. Number one is what's your win percentage, right? How many trades are you winning versus losing on? And the other one is what's your profit margin, meaning what's your reward to risk ratio? Are you averaging a 2.1? Are you averaging a 5.1? Are you averaging 10.1? Those two variables will allow you to craft a little bit better what to do and how to grow going forward. The third component of that Skilled Stocksman would be if you know that you did this with a consistent amount of shares. So for example, let's say you started out $10,000 account and you say I'm trading a maximum of 2 futures contracts. Trade those 2 futures contracts and be as consistent as you can for at least a month. I would say probably go 3 months, just trading those 2 contracts and trading the same style, same way every single time that you make a trade. Now, if after, let's say, 1 month of that, you look and you say, okay, I have done XYZ rate of return. Whether that's positive or negative is almost irrelevant in my opinion. If you're negative, you got to look and see what you're doing wrong and how can I refine that. If you're positive, you want to focus on what you're doing wrong and refine it. So now you're going to be doing better the next month, right? So it's always evaluation. After that first month, okay, you have a benchmark or a baseline statistics of what you're doing and how you're doing. The second month, you're going to make some minor adjustments to maybe your stop loss. Maybe start using ATR as a calculator, maybe using moving average or something to help you maybe get that next step up. You're still going to be trading 2 futures contracts. So I would say after the end of 3 months, if you can prove that A, you are not only positive in making money, but B, that you're consistent about it, right? If you have 40 losing trades and you make 1 winning trade and that's a profitable one and you think you're a great trader, you're not. You got lucky on 1 and you had 40 losses. So to me, there's that consistency factor. Now, what happens if all of a sudden after 3 months, my account has gone from 10,000 to let's say 15 or 12,000? Well, now I might want to increase that and I will jump it up to, let's say, now 3 contracts. What you don't want to do is like double or get, exponentially large, because when you start going from 2 contracts to 5, you're going to trade differently. The numbers add up or decrease much faster when you're in 5 lots versus 2, right? So go to 3 and see how that works. If you can prove for a month you're consistent, then go to 4. And then you slowly build that way. That's how I would recommend it. With regards to what percentage you're willing to risk on a trade, I don't have a specific number. I think 2% is a good benchmark. I think when you're starting off, maybe you want to go with 1%, right? Should you be using all of your capital in your trades if you're just starting out? The answer, no. I think if you're just starting out, you should be using a very small amount of your capital just to have some skin in the game, right? Get your feet in the water, and then practice. Practice without the intent of making money. Practice with the goal of making good trades, right? I want to make sure everything is done properly. I want to make sure I did my entry and my analysis all properly. My stop loss is done. From there, you start to get better, more confident, and with confidence, you can start to grow your account. So, Skilled Stocksman is a long-winded answer for you, but for me, there wasn't a set percentage stop amount. As I mentioned with my day trading, that was really easy. It was $250 per trade, $500 for the day. If I lose $500 in the day, wipe your hands, move on, go out, do something, and come back another day. As a swing trader, as someone goes a little bit longer term, yeah, I have to have stop losses, but they're not going to be $2 to $150. They might be much bigger than that. How many contracts can you realistically trade in the futures indices if you want to trade many? Depending on which futures product, but if you're trading S&P futures, you can trade pretty big size there. You start getting into 10, 20 contracts, that's still totally doable during regular market hours, right? If I go out there and I'm trading 50 contracts after hours when things are illiquid, I might be moving markets. But let's be honest, most of you probably don't need to be trading 50 contracts. That's getting pretty big. Option-wise, I guess it all depends on the liquidity of each individual asset that you're trading. I like personally to stay with the major ones. You notice when I go through my 1% strategy, it's mainly these securities down here, right? These all have fairly decent volume. Let me real quickly just show you on a daily time frame here so you can see. Let's add on volume at the bottom. That's Bed Bath & Beyond, but here's XLY, which is probably one of the more illiquid ones of this, and it's still trading 3.5 million today, right? So it's well over 1.5 billion. Here's financials, right? Financials, 33 million shares traded today, plenty of liquidity. This one's probably arguably the thinnest traded. This is materials. Well, it's still traded 3 million shares today. So, that's the low end is 3 million. 5 million for XLK, XLI is 6.8. So I'm definitely looking for things that have liquidity. I will not be trading really oddball securities at my 1% account. I just don't do that in there. The Best Buy, that's an account that I consider to be pure speculation, right? So I'm okay with taking flyers in that account. I just can't do that in the more consistent accounts because I know that the odds are pretty much against me. Let's see. We're talking taxes here. All right. I'm looking for if it's directed at me, just let me know, and I will. I'm looking for the 3 question marks before, just a couple question marks before your comments. That way, I know it's directed at me. Otherwise, I'm going to assume you guys are chatting amongst yourselves. Shinobi says I keep stops the same no matter what, adjusting my size, leverage accordingly. It's always. I'll always want to find at least 3 to 1 risk. Perfect. Now the challenge there, Shinobi, is. It really depends what you're trading, right? If your stop loss is, okay, let's go do an example here. If your stop loss is, let's say, $250, well, trading something like, this is the SRS. There's a lot of these old penny stocks I used to trade have just disappeared. Let's say you're trading Ford and you have a $500 stop loss. Well, a $500 stop loss in Ford, which is trading at $15.88, you could have a a much bigger stop or be trading much bigger shares versus something like Tesla, which was down pretty good today, which is trading at almost $900, right? So to me, that's where things start to change a little bit, is depending on the security. Where even if on this list here of my ETF sectors that I trade regularly, you notice that XLF is $34, but I got XLY at 167. So my stop losses are going to be different accordingly, and I have to adjust my share size if I'm trying to stay within that specific dollar amount stop loss. Most important number is how much I'm going to lose. Yep, absolute GS. And you know, the amount of time it takes people to figure that one out, I think is the amount of time it takes for you to be successful. I know it sounds weird, but the longer it takes to figure that out, the harder it's going to be. Most people, I would say, especially having done this for years and have taught so many people, most people will take a class right now. I was just at Online Trading Academy today, and there was a nice room packed, and Grayson was there giving a presentation on market timing. And sometimes I'll just sit back and look and go, you know, the vast majority of the people in this room right now are focusing on how much money they can make. They come through that door thinking how much money that they can make. And the truth is, if you focus on how much money you can make, you're most likely going to lose it, right? Obviously, you have to think of, if I make this trade and I do it right, what is the upside potential? But more importantly, what's that downside potential, right? So I agree with you, GS. That was probably the toughest lesson for me to get. It took me the longest to get, and when I made that, things turned around significantly because I wasn't really putting pressure on myself to make money. I said, my pressure is I can't lose big. I'm okay to lose small. I'll lose small all week. I don't care. Fine. Little loss, little loss, little loss. Who big deal? It doesn't bother me. I can't lose big. And everybody needs to come up with what your number is. I do that when I taught the trade plan class. I would tell everybody, I want you all to tell me what is a number that you can lose on every trade, and just brush it off like, it is what it is. I lost, no big deal. But if you are trading and all of a sudden you're taking losses that are making you kick the dog and slam things and throw stuff around the house, and you're cursing at the windows and you're just pissed off the rest of the day, that's too much. You risk too much. Move it down, because you're going to lose. There's not a person in this room that has not had a losing trade. They suck, but keep them small and you'll be good in the long term. Don't let anything get away from you. In baseball, the worst thing that can happen to a batter from a batting perspective is they strike out. But that's only one tiny little data point over the course of an entire career. I always bring up, hey, Les, thank you very much. I would cheers you a cocktail, but I've only got the Habit Burger iced tea here today. And I know some of you are international and may not follow baseball, but, you strike out and you sit down, you go in the dugout, and then what happens? You don't worry about it. You come back and you get to that plate the next appearance and you swing the exact same way because you're trained to swing that bat. And I think that's why I love teaching for OTA is we're really saying, here's how to swing that bat. Right? Here's the routine. Here's how you should hold your elbow. In that analogy, if you're showing people the right way to swing the bat, then the odds of them getting on base or hitting the ball is far greater. Are they going to get out? Sure, they're going to hit pop flies. They're going to ground out to the second baseman. But ideally, they'll be getting some doubles, triples, home runs, and just grinding your scorecard out. And your scorecard is ultimately your account. Let's get that thing growing. Like getting in the ring with Mike Tyson, only focusing on knocking him out. Yeah. Get in the ring with Mike Tyson, you have one thing to focus on: run. I mean, how old is Tyson now? Is he 55, 60 or something? I saw him fight Roy Jones Jr. recently, and that guy is a scary man. Like, I think even at 80, that guy could knock me out. I'd be running. I went back to the Habit Burger. I did. And it's $11.87 today. It's up another 40 cents in 2 weeks, the cost of a combo meal at Habit. It blows my mind. I'm like, I'm going to have to do layaway next time I go get a burger. Drives me crazy. Anyway, sorry, long-winded answer, but Skilled Stocksman, did that help you at all? I'm hoping it did. I know that you've been trading a long time. I know you listen to a lot of other influencers or people in the trading world. So, I don't have a specific strategy step by step. I know what's worked for me, and I know what helps people get on that right path. And, just a short story, as I'm full of stories. How much time do I got left? Oh, we got 20 minutes, although I'm not going to go the full hour today. I was teaching a class Online Trading Academy. This was probably back in 2006 or 7. And one of my students was an engineer, was always really quiet, very analytical, had a hard time trading because for him, 1 + 1 is always 2. Always 2. It cannot be. That's the foundation of math, is like 1 + 1 is 2. There can be no other solution. If you trade long enough, you will realize that 1 + 1 is any number that it needs to be. So from an engineer perspective, trading is really, really hard. And I basically just helped him, said, okay, you are used to structure and routine, are you not? And he's like, yep. Okay, well, let's work on your structure and routine. Don't worry necessarily about 1 + 1 = 2, because it's going to be wrong sometimes. Sometimes it'll be 2, sometimes it'll be 3, sometimes it's going to be 0.5. It's the challenge of trading. What I wanted him to focus on was, here's my routine. I do this, and this, and that's my plan. Boom, done. Every time. I will do the same thing over and over again. I go, can you do that? About a year later, I wasn't teaching the class, but I saw him back at the academy, and I was like, hey, how's it going? How are you doing? He's like, doing really well. So we went out to lunch, we talked about it, and he's, I won't gloat or anything, but I mean, it was impressive what this guy was doing. And I said, well, tell me, what was the turning points for you? And he goes, not thinking that I had to do everything that the market wanted me to do. I had to do everything that I had to do myself, which was, these are my steps. And when you helped me write those steps out, it made it really clear that sometimes those steps will work perfectly. Sometimes they're going to be absolutely legendary and my trades are going to be phenomenal. And sometimes those trades are going to be bad and I get stopped out for a small amount. I said, okay, great. I go, you want to talk and share that with the class? He's like, nope. He's like, I don't want to get up in front of class. He sat there, I guess, the whole week, his second time through, and just sat in the corner and observed. And I was like, man, share your story, because that's how we all get better. The only cure for high price, Shinobi, is a higher price. All right, Stocksman. Hopefully that helped you out. Let's see. That's actually all the questions I had. I only had 2 questions or 3 questions that came in. So that's my shtick for today. Is there anything else that I could go over today? What was of interest for you guys out there? I thought about going through the overall markets, and I was like, you guys know what happened out there. Obviously, it was a fairly negative week if I switch this over to a weekly time frame. I am still holding my Tesla, by the way. Today was not a good day from a Tesla perspective, but remember, they are going to be doing a split next week, so I will probably unload my Tesla shares probably Tuesday. They split on the evening of the 24th, and Tuesday's the 23rd, so I will probably dump my Tesla on Tuesday. Let's go look at the overall markets just from a weekly perspective. You'll see most of them are going to have pretty decent red candles, if not shooting stars. So here's that Dow. I know Bob Dunn's loving this one because he loves a shooting star on a weekly time frame. Guys, we've got one on the Dow right now. Bitcoin, well, bloodbath out there, just taking away literally a month worth of gains erased in 1 week. Gotta love that. NASDAQ, you pretty much just have what some people call a tweezer top, where it just shoots up and reverses right back down. We gave up, almost erased all of last week's gains with the NASDAQ, but still looking strong from an uptrend perspective. S&P 500 and the other indexes are going to look fairly similar. There's your S&P. Not a shooting star in my opinion, just because the real body is too big. We have the Russell 2000. This is actually what some people may call a dark cloud cover. Look, Japanese candlesticks can be very difficult. To me, they can be very lagging, and I think you can string together any couple of candles here and call on what you want and make a story about it. But this is the beginning of what's called a dark cloud cover. For it to be a dark cloud cover, the next candle has to open up and then sell off down below that one. It's actually a fairly simple pattern, but I don't know. It's a bit lagging in my opinion, so I'm not a huge fan of dark cloud covers, but nonetheless, that is the pattern that is showing up on the S&P, on the Russell to talk about there. All right. So let's see. What else I got? 2 more. We'll go to gold, which obviously erased 2 weeks worth of trading, big down move, and still part of that big downtrend. Oof. No, not today, Doug. It shouldn't. It splits on the 24th is the date, unless they surprise the hell out of me and jump that thing up. But it's supposed to be the 24th is when they do their. Whoever holds on the 24th, it splits on the 25th. We can go out here and go. Really nice feature about TradingView is I can shift over to the daily, and you can see the S right here at the bottom. Right, that's still supposed to happen. As of the morning of the 25th, it will split 3-1. My guess is you will probably, and I'm long, so I'm biased, but anticipating it breaking these 940 to 950 marks next week and getting a rally into that split as typically they do. I may be totally wrong, but when I purchased it, it was 830 on the call options that I bought. Actually, I bought the 850 call options, so I think I'll be fine either way. Okay, let me real quickly show you what's happening Monday. And bottom line, there's nothing happening Monday. Here is your calendar for the 22nd of August. Nothing going on for the U.S. Not really anything noteworthy in my opinion. You can see you've got CPI numbers coming out for Japan, but let's be honest, they're not going to do anything with their rates. And you have manufacturing and services for Australia. Other than that, kind of a quiet day. Next week is not full of a ton of major announcements either, so maybe a little bit of dust settling. There is the Jackson Hole Summit happening next week, which should start on the 25th of August and go to the 27th, and that's obviously a very interesting one, as central bankers from around the world will be gathering. And, I believe the topic for this Jackson Hole Summit, which happens once a year, is reassessing, I can't remember the exact term, but it's like reassessing the complexities on market evaluation going forward. So I think the reassessing part was interesting because every meeting for the past few years has been directing policy and how do we change this and how do we do this. Now let's reassess everything because here we are in a very different market environment. Let's see. I posted a question about how only Michael Burry could see an obvious problem in the subprime mortgage and the related securities. How did financial world not see the garbage that subprime was? Well, let's be honest. It wasn't just Michael Burry, right? There were a lot of people sounding that alarm. He was just one of the most prolific ones, and obviously capitalized on that with a significant amount of capital. There's a lot of people. I mean, I had friends in the real estate world that are going, "This is unsustainable. There's no way this can happen," and it just kept on rising. That's the challenge of those types of environments, and I would argue that our markets are in a similar situation. It's like there's just no way that this can keep on going. It's fueled by paper profits, and then people have paper profits, so they take more money out against the paper profits, and they inflate it even more. And inflate it even more, well, you're seeing massive liquidations in the crypto world right now. A lot of it is due to over-leveraging, and they're just liquidating these positions, and all of a sudden it comes crashing down. At some point, my gut tells me that's going to happen in the equity markets. It just hasn't. It just keeps on trucking, and we know, if Brendan was here, he'd say, don't fight the Fed. You never fight the Fed, and he's 100% right. The Fed is going to do whatever they can to keep propping the markets, the economy up, even though they say they're not trying to do that. Full employment and price stability, that's their goals. Right. They're propping those markets up because they're all invested. So how did the world not see the garbage that subprime really was? I think a lot of the world did. But, I'll give you an example. I know Tom, my examples are absolutely horrible. But if you sit down in Vegas and every time you put in a quarter in that slot machine and pull the handle, you win, it's not right. That should never happen. It's broken. But what are you going to do about it? I'm not getting up and walking away from that machine. I'm going to keep putting in quarters until I'm dragged out of that place or security thinks that I'm cheating. I'm not. I'm just abusing a broken machine. So I think that in the subprime condition, that's exactly what it was. The writing was on the wall that, again, having people who have no money, like, oh, I own 8 homes. Like, no, you don't. You barely even have enough money to make a down payment on one, but you've been leveraging and leveraging and leveraging because basically the government mandated quotas on loans, that they had to be making loans. And then if I don't make it as a lender, then my neighbor over here will. So, okay, here you go. I go. Oh, you want to see the debt clock? Sure. That's an ugly one. Bear with me. My tech support over here is going to have to type it into the browser. Here is the debt clock out there. Subprime brokers certainly played that broken machine. Yeah, absolutely. Look, if you're a subprime, if you're a lender, through your years of experience who is a good potential loan applicant or not, right? That. It's like when someone walks into the bar and they're like, "Hey, how's it going, everybody? You doing good? Great." They're probably fine to have a drink. But then you got that guy like, "Hey, bar. Yeah, good." You're not going to serve him a drink. But what if you were mandated by your employer that you have to sell you have a certain amount of drinks to sell? That, in my opinion, is what happened in the subprime, right? You had people that came through those doors, those subprime lenders. You're like, "Do you have a job?" No, I'm currently unemployed, but I play music at the local train station. I get change. Okay, so you're employed. How much money do you have in the bank? I don't have a bank account. I have no money. I'm destitute. Okay, so you have a bank account. If they don't make that loan, then somebody else will. So, can we blame the lenders at this situation? I don't think so. I think we blame the government because the government made it that there were these quotas. The whole everybody has a home, right? Okay, well, unfortunately, there's certain people, and I apologize, I don't mean to sound condescending, but there's certain people that are not in a financial situation to be buying a home. It is a major commitment. You buy a home, you got to think about so many other factors: property taxes, insurance, all the maintenance requirement, upkeep, all that stuff. I just think that there's people that should not have been buying homes in those times. I think similar situation right now. You've got 20-year-old kids buying $25 million worth of Bed Bath & Beyond. They got lucky, made $100+ million on it. I don't know. Lenders were scrubbing loan apps. What does that mean? What does scrubbing mean? Is that just like, because from what it sounded like to me and people I know in the lending industry who were just milking it, they were getting paid so much money. I mean, I had multiple friends who were in the mortgage industry back then, and they were killing it. Like, man, you were just swimming in money. It's like, yeah, I just basically just sign off on loan apps all day long. Yep, you're good. Yep, you're good. Yep, you're good. Yep, you're good. We're subsidized. The government's backing us up. Great. When Fed says they want to destroy demand to control inflation, what do they mean? Great question, Robert. So how do you destroy demand? If you have a certain amount of dollars, let's say I have a $100 bill, and I'm demanding to go to Habit Burger and buy a burger which was $10, okay? What happens if all of a sudden that burger goes to 15 or 20? I'm now limiting the amount of things that the consumer can buy. That's inflation. So by destroying demand, you have inflation going up. Now, the other thing that they're going to do is, well, you let inflation rise. However, they're going to be removing money supply, which tightens things up and makes it so the individual consumer who's getting dollars, the value of their dollar is going to be actually increasing, right? That's one way to fight inflation. By, as you said, destroy demand, you're trying to get to the point where people can't afford goods and services. You're choking out the economy. You're trying to prevent people from spending money because it's the spending of money that's causing inflation. And it's the amount of money coming in that causes people to spend more money, whether that's increased wages, whether they're getting, not bonuses, but relief packages and all that stimulus that people got. That caused inflation. That's more money. So now what you got to do is you got to make people spend less money. You take money out of their pockets. Yeah, let's see how that one goes going forward. Oh, there you go. Editing loans to get them funded. Cool. Thank you for the clarity. I didn't know what the term scrubbing was, but it makes all the sense in the world to me. I mean, you saw some really bad stuff going on in that lending industry. Are you in the camp like some others that they can't raise past 3.5% or something will break or can? And I'm not in the camp that they're limited to 3.5%. I'm in the camp of I think they could go significantly higher than 3.5%. I do think it'll put a lot of stress on the financial markets. I mean, if we get to 5 or 6%, these equity markets really have no choice but to go down. However, because inflation numbers dropped so significantly, we've been talking about the commodity prices for months now. Those have fallen so much. Now you're seeing inflation subside. So the Fed can back off a little bit. I do still think we're going to see a raise at the next meeting. Let's go check what that is, and I'm going to wrap up here because I'm creeping towards an hour show. But there's our debt clock. If you really want to be depressed, check this one out. This is really bad. One of the ones that I really enjoy is down here at the bottom. I'll zoom in for you guys at home just to put it into perspective. U.S. federal debt to GDP ratio. In the 1960s, we were at 52%. In 1980s, we're at 34%. 2000s, we're at 56%. And we've over doubled that now. We're at 123%, meaning we are in so much debt. And what that tells us is that we have been inefficiently running our government. If the federal debt is that high, they are inefficiently running the government because they need more and more debt to keep their house of cards afloat. Well, if we could chart a trend of this, it's gone like this, parabolic. And to me, that is a dangerous sign because this is obviously 2020's reading right here. Well, what's going to look like in 2040? Are we going to be at 200%, 400%, 1,000%? I mean, do we default? I mean, those are all really big considerations going forward. Which is not a good thing to think about. And damn it, I was going to go show you something, and I completely forgot what it was because I looked at the debt clock and thought I should talk about that one. The Fed funds rate. Let's real quickly check that, and then I'll wrap things up for you guys here. Remember, I've been in the camp of saying 50 basis points. A lot of people saying 75. What's it at now? We're at 250, and right now it's a 57% chance we're going to get 50 basis points, which is what I believe is what we will get on that September 21st meeting. So we got about a month from today, roughly a month, we'll get that rate announcement. If anything, I think it might drop a little more than expected, maybe get to 25, but I think 50 is where we're going to stay at, not 75. Inflation has calmed those fears a little bit. All right, that's going to do it for me, everybody. I got to wrap up and go do some stuff. I'm actually going to go get myself a nice cocktail now, maybe go play some backgammon in a local brewery over here and have some fun in Southern California. I hope you guys have a fantastic remainder of your weekend. If there's things you want me to talk about next week, I do have some guests coming on the program. I will be updating the calendar at TraderMerlin.com, which I have not done a good job of. I apologize, but I got too many things going on. If this was my sole dedicated job, I would I would probably have like 10 times or maybe 100 times the number of viewers and guests and everything. But this is just when I can, I sit down and try to get this show going for you every single day. So don't think this is my only business. I love doing it for you, but it's a struggle sometimes. Next week, I'm going to have John Rowland on, and I'm going to have Corey Lane on. So I've got some options questions for Thursday. If you guys have option stuff, let me know. Corey will be on Thursday. John Rowland will be on our Wednesday show. Monday and Tuesday is probably just going to be me. And then the week after, I'm going to have Justin Krebs talking about annuities. So finally getting some more guests on for you, since I think you're probably tired of watching me all the time. If you have anything else you want me to discuss, put them down below the YouTube videos. Just go to any YouTube video. You can comment, question, feedback. You can heckle me about my Bed Bath & Beyond trade. I've got thick skin. I can handle it. I'm going to go have a glass of whiskey and enjoy the weekend. I hope you all do the same. I'll see you guys Monday. Take care.